In our previous episode of Market Journal, Tina Barrett from Nebraska Farm Business Inc. explained how recently passed tax legislation could impact farmers and ranchers. This week, Tina further explains what producers need to know about the elimination of Section 1031 exchanges for personal property. Tina says one might assume a 1031 exchange is done only when trading land, but can also apply to machinery or other equipment.
We hear Section or 1031 exchanges all the time in regards to land exchanges. But anytime we were also trading a piece of equipment, you were doing a 1031 exchange. We just didn't realize we were doing it. And so the new tax law has eliminated the 1031 exchange for personal property, which means we can still do it on real estate, no change there. Okay. But what's going to happen is when you go to trade that tractor or a combine or anything else, in the past, if you had a $200,000 tractor that you were buying and you had one worth $150,000 that you were traded in, you write a $50,000 check and we're done. And that $50,000 is what we put on the depreciation schedule. So what we're going to need to do now is take a look at that $150,000 tractor that you traded in as a sale. And so we have a sale that we need to recognize the gain. Because we've had so much depreciation allowance in the last few years, very little equipment has any depreciable basis left. So we're likely looking at a $150,000 gain on the tax return. That's ordinary income, but we're going to have to recognize it in the year of that trade. As a trade-off to this elimination, they basically have given us unlimited depreciation. So we can take that $200,000 purchase and depreciate that as much as we want. So we can completely offset that $150,000 gain. So from a federal standpoint, not too bad. In fact, that depreciation for like a Schedule F is going to offset self-employment taxes. So we could end up even with a tax savings as a result because we're going to have more deductions on Schedule F and then ordinary income on 4797. So maybe not okay.
You said on a federal level okay, but on a state level?
So the state level, there's some things that are happening as a result of this that maybe were unintended consequences. Some states like Iowa do not follow the federal rules on depreciation. So you maybe can take $150,000 depreciation on the federal to offset your gain, but Iowa's going to limit you to $25,000. So we have issues in some states like that. Some states like Nebraska, where we do follow on depreciation, that's not going to affect our income tax return, but we've been putting on personal property the federal depreciable basis, which was the $50,000 trade difference. Now we're going to have a $200,000 tractor. So we're expecting to see an increase in personal property taxes paid as a result of that in Nebraska.
Meaning that producers should do something differently? How do you use this information?
I'm not sure that there's anything that they can do differently unless they want to see if they can get some sort of law change, but it's more of a planning factor of knowing that probably what's due in 2019 could actually be higher.
Should they change the way they keep records?
So I think that's probably the biggest thing that we need to think about now is the fact that as you're doing your record keeping for 2018, we need to know what that purchase price was and what that trade-in value was, where in the past we've only asked for the difference. And so that's a little something, either making sure that you're bringing those trade documents to your tax appointment next fall, or getting that information just inputted right into your records would be an important step.